And hello, everyone who knows me. And for those who don't, like Russell said, my name is Ariana. I work for Global Parametrics as a business developer, and I have been working in alternative risk transfer solutions, especially for climate risks, for almost 4 years now. So what we're going to do today, I'm going to introduce you to some of the possible ways to manage drought risks. This will be mostly focusing on our innovative water balance index. There are many different indices in the market that have drought as the main peril, but we are going to look in this half an hour just on a few case studies. And yeah, thank you for coming in. I think we have a good start now, so I will dive into the presentation. So if we start with the why, this quote is quite powerful. 40% of the world's land faces more frequent and severe droughts. This is really amplified by climate change. We know that there are warmer climate conditions. These are making the droughts more severe, and they are more widespread than they would have been ever before. Now, obviously, for farmers, this means not just less water. They are lowering the yields, they have a big income instability, and often a very increased farm debt as well. But this doesn't have a direct impact only on the farmers. It really has an impact on everyone sitting here today because it impacts our food security at the end of the day. So given this escalating climate variability and the growing frequency of droughts, there really is a pressing need to make insurance products that are more precise, more sustainable, and that also help the growers and the farmers to manage the risk before it becomes a huge disaster. When we look into why parametric solutions, obviously we know that there exists also traditional and indemnity-based insurance, as well as area yield or crop cutting experiments, but this could be very lengthy and subjective, especially the loss adjusters. When the loss assessors come and need to physically evaluate the damage, this can take months, and then until the claims are actually released, there could be another few months or even a year of delay before the farmers get a payout. This has a very direct impact on how they are managing the risks locally and how the insurance company can manage their own risks, for example, or how fast a humanitarian can receive a payout. This is very important for the clients. If they want to reseed, buy new seeds, they want to replant, they want to regrow, or they want to not go into further debt, then a very quick payout should be issued. So this is why parametric solutions, I think, are getting kind of more and more traction in the coming years. They obviously, as we all know here, utilize very objective climate and weather events. So as soon as the event happens, you get a payout. This provides a very speedy and timely recovery. You get a transparency in how the payouts are issued, and you can have a very timely intervention. So the farmers would be able, for example, to get a payout throughout the season and then act very quickly rather than waiting for another year before they're able to recoup their losses. This is not important just for farmers, like we said, but can be applied in many other industry cases. So before we go into our water balance index, I did want to touch briefly on the evolution of drought indices through the history. So as we know, it started usually with temperature or rainfall only. The first index ever in 1965 was the Palmer Drought Severity Index. And this did focus on both the temperature and the rainfall. So to some extent, it had soil moisture accounting, but it did lack the adaptability across the different timescales. What it means, different timescales, it just means that the product could not have been used for, let's say, both a 1-month policy, a seasonal product, 6-month policy, or a 12-month policy. It was very fixed in terms of periods of insurance. In 1993, we moved over to standardized precipitation index. As it indicates, this was purely based on rainfall. by all means, I think that rainfall parametric policies still have a good place in the market, especially if you have a good correlation between your client's actual historical losses and how much it rains in the area. And maybe in some regions where it's like cool or humid climates, the evapotranspiration is not that prominent. So perhaps the rainfall index is better, or it's just kind of a more simpler objective parameter that is used or preferred by local regulators. But I would always say that you do have to check if the rainfall matches the client's historical losses, because it's not always the most accurate index. As the time evolved and we come to 2010, the scientists have pushed out the standardized precipitation evapotranspiration index. And now this takes into account the rainfall as well, as it says in the title, precipitation, but also the potential evapotranspiration, or the demand of the moisture from the atmosphere. So we are looking at what causes the soil moisture to go into the atmosphere. And then we look at all the atmospherical changes in the region that we are insuring. So not just rainfall, you look at humidity levels, you look at temperature, you look at wind, you would basically look at everything that could potentially trigger evapotranspiration in that moment. So this evolution shows how there is a clear move from precipitation-only index to more climate-sensitive tools that are better to capture the impact of these rising temperatures and that better capture the actual drought severity. There are many different types of droughts as well. Like I said, I will not have time in this half an hour to go over every single drought index that's available in the market, but today we are going to focus on standardized precipitation and evapotranspiration. So in global parametrics, what we have done, and some of you may know about it already, a bit less, and I do encourage you to ask the questions in a chat there as well. So at the end of the session, we can go through some of the questions. But global decided to take the standardized evapotranspiration index into our proprietary water balance index. This is an innovative and award-winning market-proven product that we have with many clients across the globe right now. It can protect you from both drought and excess rainfall in the same contract. So I will tell you a little bit about why this index is more unique to others. So the formula, we try to keep it as simple as possible. Precipitation minus evapotranspiration equals the water balance index. So it should be quite easy to understand. We take the rainfall data and we take the evapotranspiration data, and then rainfall minus evapotranspiration, you get the average water balance index daily. And then we look at the accumulation of daily water balance index throughout the season that we are insuring, and we find what the average is. It's important to note that this average will look very different from one location to the other. So if you have a client that is, let's say, in the Amazon rainforest, the average water balance might look something like +5. But if you have a client that's more in the desert area, you would have a water balance value of -3, for example. So the average will look very different depending on the region, the type of soil, and the period that you are looking to insure. When we talk about the water balance index and we translate it into insurance terms, when we present kind of the options to you, usually we will do this by introducing return periods. So we might say, okay, this is what the average water balance index is. Now, every time it drops below the average, so let's say we have a attachment and the policy starts paying at, for example, 5-year return period, or we might say it's a 10-year return period. And exhaust or reach 100% payout, for example, at a 50-year return period. So this is how we will introduce return periods to actually visualize the severity of the water balance index. And maybe some other things that make it quite unique as well is the different application that it has. So the data provider is ERA5 data. It has a large number of atmospheric and climate variables. We extract this data on a 30-kilometer grid cell, and then we define the period and build an index for each of the periods. So it is good to know that obviously as data is evolving, there are more and more granular data sets being available in the market now. So hopefully in the future, we will be able to go even more granular, more localized than a 30-kilometer grid cell. At the moment, I think ERA5 has also the new ERA5 land data set. So the land variables of the data set are currently available at the 9-kilometer grid resolution. So it is getting more and more localized. And we found quite a good correlation between ERA5, evapotranspiration, and rainfall index and water balance index with the client's actual losses in agriculture. So we do continue to use it, obviously, when there is a good correlation. Like I said, the cover applications to water balance are quite unique. This is because you can have both a drought and an excess rainfall or excess moisture contract within the same contract or the same season of your client. So for example, this is speaking for agriculture clients, but if you have a preparation and planting beginning of the season and you are concerned with excess of rainfall, you might have a combination of drought and rainfall product. During the growth season, usually there is a pure drought policy, or during germination, you might be scared that there's going to be rainfall again and destroy the crops that you have harvested, for example. So during this period, you can have, again, either a combination of a drought and excess rainfall product, or you might have maybe just the excess rainfall on its own. So as you can see, it's a very flexible, it's a very customizable product. And another thing that makes it stand out and different from the standard evapotranspiration product is that we introduced the rolling windows as well. Now, I'll try to explain it the best possible, but basically the rolling window means that you might get paid throughout the season. So we would capture multiple windows throughout the season, and you as a client might get, let's say, quarterly payouts as the drought is becoming more and more severe, as it intensifies. This is especially important in also humanitarian sectors, because you might want to get a payout before there's a complete disaster, before it reaches kind of the national drought emergency. Or as a farmer, you might want during the season a payout, not to wait until after the season, because you will be able not to go into more debt. You might be able to buy more seeds during this time. You might be able to replant if it's early enough, or plant different types of crops. So this really helps to customize the product. But you can also choose to have like a single season, one window, and then you get paid at the end of the season immediately, which is usually a few months. And you can see what was the most severe recorded kind of water balance value in that period. So I spoke a little bit about exposure, but we can look either at the single client locations, for example, a single farm, which would represent the grid cell that the client has the farm in. Or on the left-hand side, you might be able to see a multi-farm exposure where we take the coordinates, so latitude, longitude of the farm locations, and then we match and we basically allocate the grid cell to each of these farm locations. So every of these grid cells will basically be a subcontract. And then the farmers that fall within that grid cell would buy the limit or buy the contract within the grid cell that they fall within. So you could split the limit either equally across the grid cells or weighted based on how many farms are in each of the grid cells, in each of the locations, and which have more value, which have less. There is also kind of two main ways to distinguish the distribution and the exposure of the product. I use just two clients as an example. One could be, for example, a microinsurance product like we have with 1 Acre Fund. So this is where the farmers directly buy the policies, or where you have a product embedded in the fertilizers or another type of product for the farmers. So this is where the smallholder farmers actually contribute to buying the policies and get insured individually. Or one other example could be, for example, what we have done with our client Tier Fund, who are a humanitarian organization, and they needed more like a macro level, meso level product for drought. So they are not so much concerned with giving individual farm locations payouts, but they rather needed a payout if there is drought in, especially if there's a very severe drought in one of the many countries that they're operating in. So they bought a multi-country drought product. So that is also possible. And so just to show you a few different examples of how the product could be utilized, but obviously this can also work for more commercial industry. It could be, for example, the agricultural bank wanting to protect their own portfolio, or you might be an insurance company who has a lot of farmer clients and agriculture in their book. And again, you want to protect your own portfolio from drought. And especially thinking about how the data is fed, these meso level policies make for the least basis risk in insurance. But we always have to make sure that we know the historical losses, that we can match these to make sure that we have the right product, whether that is purely rainfall or water balance index. You always want to correlate it to the client's actual losses. This is why we will always ask for this information when we are underwriting the policies. So thank you for bearing with me until now. I'm just going to demonstrate what a dry season cover would look like in our ParameterPro. So the tool uses the rainfall accumulation in the platform, and you can check with the client what are the historical losses and how much they would have been paid if they had this type of cover, or whether there is a better cover for them to use than purely rainfall. Perhaps you might need to go to a more bespoke solution. Oh, apologies, I think my portal closed. I'm just gonna log in.
Hi, Ariane. Just while you're logging in, there's a couple of questions coming up if you need a moment to get it running. What markets do we serve, and can we predict the reoccurrence of drought?
Yes, well, the markets that we serve are globally. We can do anything really globally as long as it's a good correlation, like I said, between what we offer and the actual client's losses. The data verified is provided globally. So we have 40 years of data valuable across the globe. I'm going to show what this looks like now as well in our platform. You can also kind of download the ERA5 data set for both precipitation and evapotranspiration. But can we predict? I think we can do our best. Obviously, we always detrend the data as well, because we want to take into consideration the climate trends. And we do look into potential kind of anticipatory results with the rolling window as well, where you would get a payout as the more severe drought approaches rather than waiting for afterwards. But there are many ways to go about depending on who your client is, what are the needs, what it looks like. So I would say it's quite an individualized, tailored cover. Thank you, Russ. And just to switch back to ParameterPro. So for example, if I had a single client, single farm in Australia, it's maybe a sophisticated client, I can discuss with them one-on-one what amount of rainfall is kind of complicated for them, or when do they start using the wheat crops. I would go into the data set and choose the ERA5, for example, and I can choose a product here. We have many different products based on climate data, but let's say I want to look at the dry season product for this instance. I would be able to select the farm by grid cell by putting in the latitude, longitude coordinates, or by putting in the address of the farm, which I'm going to do now. There we go. So I put in the address, and then the platform will show me which grid cell is allocated to this farm particularly. Now, because I'm in Australia, I might know that the dry season, or maybe I will discuss this with the client, is from the 1st of May until the 30th of September. So I'm going to select this option in the platform. So we're looking at a season of 1st of May and September. Perfect. And now I have my farm. I have the dry season. And here I will have my trigger, exit, and aggregated limit. The trigger means the attachment when the payout starts. So at which trigger, at what cumulative millimeters of rain will the cover start paying out? And exit would mean until it reaches 0 of millimeters, you will get a full payout or exhaustion of your payout. So this will be 100% of the payout. The limit could be anything, but obviously I'm going to calculate just for the example on a 1 million limit. This will just take a moment. There we go. And now here I can see, okay, if I put my cover as 102 trigger attachment, I would never had a payout historically for my client. So the price might look very compelling from an insurance perspective, but we definitely will not want to sell this cover to the client because we can see here that it never fell below 102 millimeters of rain. So what I'm going to do, I'm going to adjust this trigger to 150 millimeters, because I can see in my historical table and doing the analysis here that the average was somewhere around 130, 140. So I think 150 will give us better results. Perfect. So now in my historical payout tab with 150 millimeter of rain or below, I see that there has been some very frequent payouts to the client. And now I can discuss this with them. Would this cover be suitable for them? Is there a good correlation between this rainfall and the client's losses? So in 2000, have gotten 100,000 US dollars in your payout. In 2018, this would be almost 300,000, and so on and so on. And then I can check with my client as well and let him know what the index average is approximately. We also have here historical payout standard deviation. This just means how much is the payout different year to year, or is it very volatile location? And do you have to be a bit more accurate with the index and more careful with the pricing? Or is the standard deviation quite close year to year in terms of payouts, and they don't deviate that much one from another? So here I also see, when I scroll down to the loss analysis box, I would see my policy limit and then a percentage of the 5-year burn cost, 10-year burn cost, year burn cost. Here below that, I will have my expected loss, and this expected loss will be the blend of all the historical burns. I also see here the attachment, so the likelihood or relative probability of the trigger actually paying out in terms of return period. So here I see in the 3 years. I can now create this offer, or I can download the Excel spreadsheet as well, share with my client, discuss cover, and try out different types of covers. So as I said before, this is a very good way to check whether there is an actual correlation between, let's say, a rainfall policy, if the client wants to start simple, and the actual historical losses. And if you find out that there is not a good correlation, that likely means that you have to come to us or someone in the market for a more bespoke modeling. So you will need something like a more sophisticated index, something like water balance, and then you would check whether that covers your losses better for the client. Thank you. So I'll just stop here to answer any questions, just bearing that we have 3 minutes left. But if you do have any questions I'm not able to answer in this 5-10 minutes now, please feel free to contact me, and then we can go over the questions individually as well.
Hi, everyone. I'm Russ with CelsiusPro. In the chat is wide open if anyone would like to pop any questions in there. Ariana, there's a question. Is there a reason, or are you not or are you using ERA5 land currently?
Yes, so it is available for download already, and we have implemented it with some microinsurance partners at the moment. It's just good mentioning that the ERA5 land that's on lower resolution is available for the land variables only. So the atmospheric variables that are above surface, are still going to be on the 25 kilometer grid cell resolution. But we do use it, and we can use it going forwards if we need the more kind of a micro insurance product.
Great. And there was a question, is the product useful to farmers working in mountainous climates such as coffee growing?
Yes, so I would say that there is the actual product is very crop agnostic, and it just look at what the average water balance is in the area that you are looking at. So we would be able to find the average water balance in the mountainous area. It doesn't make that much of a difference what is kind of the type of the terrain. It's more that the actual water balance value will change depending on the type of the terrain. We find the average, we look since 1980 towards today. We don't want to take too much data backwards either, because there are a lot of changes in the climate variables since back then. So we want to make sure that we have the most accurate average value, and then based on the below average, we set your trigger to start paying out.
Great, thank you. There's another question regarding locating areas inside of ParameterPro. What is used for addresses, if you could review that again, and is it easy to locate any address in the world?
Sorry, what do we use for addresses?
If you could re-go over whether it's latitude, longitude, or any street address, so to speak, in the world.
Okay, so you can either put the address of the actual location, so by the name, as it would be, for example, in Google Maps. You can just zoom in. If you know where the farm is, you can literally zoom into the map and then select your location and your grid cell of interest, or multiple grid cells. Or you can put in the latitude, longitude of the location, and the farm, the grid cell of the farm will. If you have many locations, like if you have many different locations, sometimes it's better to come to us so that we can extract that data for you and do it in our backend.
That's great, thank you. Another question, how have you worked with places where the SD of the index is considerably high?
Where the standard deviation of the index is high. So I guess that you would be more conservative with pricing and how you set the index. It's a very good question, maybe for underwriters who would be actually writing these policies. So I can definitely ask perhaps Jason as well whether he had any instances where the standard deviation was so high and what they did about it. But I think you would be more conservative with pricing, and you would be more careful of where you set the actual index. Obviously, do more due diligence and really discuss with the client which years they needed those payouts.
Great. And then in terms of the scale of coverage, that you could maybe talk about how easy it is to scale this across larger regions. There's a question, do you sell to cities or regions? For example, Austin, Texas is prone to flood and drought, or municipalities, excuse me.
Yes, 100%. So the water balance index is very flexible in terms of the time scale. So we can look at the short-term droughts, the ones that are more kind of peculiar and particular for the agricultural droughts and the seasonal droughts. We can look at medium-scale droughts that affect maybe like water reservoirs or the governments, like you said, municipalities. Or you can also look at the 12-year drought, but that can become quite costly, and especially if you have multiple throughout the year. So it's just something to consider, that it's a bit unusual to have, let's say, a 12-year policy, because drought is more often than not seasonal. But we would always find and test perhaps different time scales depending on the issue that you're trying to capture within a city. When it comes to flood is different. So we do have a product for flood, but flood is our flood rapid recovery index. And basically what that insurance does, it looks at accumulation of rain within 48 hours or 24 hours. We can move slightly the window in which we look at the cumulative rain. But then if you have a flood that is not very well correlated with rain, but it's rather, let's say, the rising river levels, or maybe it has some man intervention like opening the dams, you would need the flood extent maps. And in that case, you would need to pay their university or maybe a third party for flood extent maps. And there are specialists in the market who do deal with this very complex kind of flood risks as well. This is purely their specialty. They only deal with flood. So it really depends on the complexity. Again, we did have very good correlation with rainfall and flood, but you would have to check that.
Okay, great. I think there was an edge of the question also on how wide the scale, on how large the region of coverage. I know the answer, but maybe you could illuminate that a little bit. And on top of that, how long are your policies typically, and what limits are you often deploying?
Great. So the scale, it could really be anywhere from a single grid cell to a country level cover to even multi-country cover. But each country will kind of be a subcontract of its own, obviously. So we can go as large, and obviously it can be municipality or admin level unit region as well. How long are the policies typically? So I think the most use cases that we have at the moment would be, for example, like this 1st of May to 30th of September, or let's say if we are in India, we might want to cover Kharif and Rabi season. So usually seasonal products, mostly pertaining to agriculture, but even the ones I saw for water reservoir are usually around 6 months, 6 months as well.
And what limits are you often deploying?
Yes, the limits, it can be anything really from 1 million to 15, 20 million in general, I would say. But obviously with reinsurance in the market, you can achieve larger limits as well.
Great. I see it as 5 minutes past the 30-minute webinar. We are unofficially ending the webinar right now. If anyone would like to run off to your next meetings or whatever you need to do. However, if anyone would like to remain and ask Ariana a few more questions, putting them up in the chat, we'll be happy to wait here for the next 5 minutes or so, or until there's no questions. So thank you very, very much, everyone, for joining us. I turn it to Ariana for the final goodbye.
Thank you. Seems like there are no further questions right now. So thank you everyone for coming. And if you do have any further questions, yes, we do have reading materials online. We have it on our website, CelsiusPro.com, if you look at it. And we also have it in the ParameterPro in case you have access to the platform already. You can contact me as well, LinkedIn, email. So I will be very happy to send the materials over and our standard product description. Thank you.
Thank you very much, everyone. We wish you a lovely day. Thank you so much.